Hey guys, hopefully everyone is doing well. Today's target is to solve question number 4. The chapter which we are related with is accounting ratios. And as you can see, again we have a situation where two different years, not different companies, two different years are given. 93 is your first year, 94 is your second year, and you will have to calculate average as well because these are number of years. These are not different companies. And second good thing is we are asked to calculate following ratios. It means you don't have to bother what ratios are required and what ratios are not required. So they have directly mentioned you that these ratios are needed to be calculated. So only 4 ratios are required. It means this is the short question. Second thing is I will be solving for first year, and let's see if we'll have time, then solution for the second year will also be solved. So otherwise you will solve second year by yourself because they are absolutely same, nothing is different, same formulas, just you will take amounts of second year instead of first year. So let's start our question. First ratio required is current ratio, and I'm very hopeful that you people now have complete idea how to calculate these ratios and you do know the formulas. Current ratio, you need current assets and that would be divided by current liabilities. Let's put a divisor. You need to have current assets, then you will put current liabilities. Finally, they would be divided. And now we are looking at how many current assets are. First, I'm going to increase the font size, and secondly, I'm going to centralize it so that you can view it properly. Current assets. Look at here, stock, yes, current asset. Debtors, yes, current asset. Bill receivable, yes. Advances, yes. Cash in hand, yes. So 1, 2, 3, 4, 5. First 5 are current asset. 10, 20, 10 to 18. Let's try to write 10, 20, 10, 2. Let's check again. 10, 20, 10 to 18. 10, 20, 10 to 18. One more. So here our current assets are completed. Once again we should check 10, 20, 10 to 18. 10, 20, 10 to 18. Alright. So we are now going to see how many current liabilities are present in our question. After cash in hand, we have creditor. Yes, it is current liability. Bill payable. Yes, current liability. Overdraft. Yes, current liability. These three are liabilities. Next are debentures. Please note it down. Debentures are a kind of loan which you will take for the longer period of time. So debentures are not current liabilities. Only three: creditors, bill payable, and bank overdraft. These are three liabilities. 25, 15, and overdraft is 0. So only 25 and 15. In this way, we have completed our current liabilities as well. So finally, we are going to put them on our calculator and let's see how much we will get. So for that purpose, I'm going to write everything same over here and let's put it on calculator. All current assets would be added. So we have sum of current assets. How it had. Now let's see what is happening. Why this percentage is coming? Let me check if there is something required. think this cell is going to be changed. So meanwhile you can learn as well. This percentage is not supposed to come over here. And yes, this was the percentage. Please note it down. We have gone to format cells and put it in journal and click OK. So this percentage has been vanished. All right. So now we will see 10, 20, 30, 40, 42, 8. Yes, now it is okay. So let's put the divisor, and now for second we will be posting over here. Just add it up, and we have got 40,000 for current liabilities. In this way, current assets are 60,000 and current liabilities are 40,000. In this way, we are now able to calculate them. How? These are current assets divided by current liabilities. So first answer is 1.5, and you can see current ratio 1.5. So please note it down. You will be following same pattern for second year. As you can see, stock, debtor, bill, advance, cash. First 5 entries are current assets. So what you will do, 25, 25, 0 and 15. These are your current assets. Then you will choose creditors, bill payable, overdraft, 30, 20 and 2. 30, 20 and 2. These are your current liabilities. So for second year, you will solve it by yourself. In this way, our first ratio has been calculated, and now we are looking forward for our second ratio. Let's see what is second requirement. This is liquid ratio. Let's write down liquid ratio. And formula for liquid ratio is you need to get liquid assets, or we may take this formula as a whole over here. Just instead of current assets, we are going to write liquid assets. And as you know, everything present over here would be written as usual. And first method is direct method. You need to subtract stock and prepaid. These were 5 current assets: stock, debtor, bill, advance or cash. There is only one item, stock, which should be excluded. Prepaid are not present. So 10,000, this stock of 10,000 we are going to delete. And now we have our liquid assets, and current assets were here. Current liabilities would remain as usual. We are just copying and writing over here. First step is to calculate your liquid assets. We have subtracted stock. Again the same thing, that problem was not supposed to be over here. Perhaps we are using another page. This is just because of that. Alright guys, so we have our liquid assets. Now liquid liabilities are calculated as well. So finally we are now open to calculate liquid ratio, liquid assets. Let me check again. The 2030, and this was 2000. Okay, see 10,000, 20,000. This 10,000 was stock, 2 and 18. 10, 20, 2 and 18. Now we are open to calculate liquid ratio, liquid assets divided by current ratios. So we have got 1.25 for liquid ratio. This is your liquid ratio, and first year answer you can see is 1.25. Alright guys, in this way we have completed our liquid ratio, and I would love to let you know liquid assets can be calculated by Second alternative, indirect method, you need to have current assets and just subtract stock and prepaid. Here you will come to know that our current assets have been already calculated. Look over here, current assets. These were 60,000. So just put 60,000 first, and then you need to subtract stock. The amount of stock for first year was 10,000. So here you will put 10,000. And ultimately you can get your liquid asset by subtracting 50,000 your current assets, which we have already written. Now please understand, this is your indirect method. Direct method is you will write all assets except all current assets except stock and prepaid. So you can make a good comparison of current assets. Here 1, 2, 3, 4, 5 were current assets. Stock amount was 10,000. So we have excluded 10,000 and remaining all amounts we have written, that was 50,000. This is direct method. And indirect method, you can apply this formula. From current asset you will subtract stock and prepaid. Prepaid was not present over here, it was 0. And then stock value was 10,000, current asset 60,000, which we have calculated above. So we have got for 50,000. So both methods are valid. Whatever you want, you can do it. Now let's see what third requirement is. Look at here, this is stock turnover ratio. We will write down stock turnover ratio, and you will calculate it with cost of goods sold and divided by average stock. Let's put a bottom line over here, and we need to make a proper size for everything. Alright, stock turnover ratio we need to put, and the formula which we have written is cost of goods sold divided by average stock. Let's get back to the question and see where cost of goods sold is given. You can start from here, stock, debtor, bill, receivable, and see where cost of goods sold is given. And you can see whole question does not include cost of goods sold. It's time to see how you can calculate cost of goods sold. We have already understood it very well that cost of goods sold, or CGS, is equal to sales subtract gross profit. So this is our formula where we can calculate our cost of goods sold. Why we are choosing it and why we haven't chosen in previous questions? Because in all of the previous question gross profit was not given. Although sales were given, but gross profit was not given. So this is the first time we can calculate gross cost of goods sold directly. Amount of sale is 3,50,000. So you can put 3,50,000 over here. Then you will subtract gross profit, which is also given. Look over here, gross profit 70,000, and here you will put 70,000. In this way, we are now open to calculate it. So guys, we have calculated cost of goods sold. Look at here, stock turnover formula, we need cost of goods sold, and indirectly with the help of this formula we have calculated 2,80,000 as cost of goods sold. That we can put over here, 2,80,000. Let's put a divisor over here, and now we need average stock. Since this is first year, you do not need to calculate average. For first year, average stock is not calculated, only stock would be put, and stock is 10,000. So let's put 10,000 over here. So guys, formula is completed. We will divide cost of goods sold which was 2,80,000 divided by average stock, which is 10,000. So we have got our answer 28. So let's see stock turnover. This is stock turnover and your answer is 28 times. Our answer is also 28. In this way, stock turnover ratio is also completed. But here I would like to let you know that when you will calculate same formula for second year, then you will calculate average. Please note very carefully. This is 25,000 and 10,000. Then for second year, you will calculate stock by 25,000. Add this stock of 10,000 and divided by 2. This is the way where you will calculate your average stock for second year. Average stock for second year is 17,500. Please note it down carefully. Alright, for second year we can solve it. Remaining you will solve by yourself. But here stock turnover for second year, same formula would be used, and you will write for second year, and same formula would be used for second year as well. That is why I was not doing it, because it is just cheating. You can see whatever is written for first year, you can apply for second year in absolutely similar way. Alright, now we want to know for second year sales. Look over here. Your second year sale is present 3 lakh and GP is 50,000. So we will put over here sale is 3 lakh and then 50,000 is your gross profit. Once again we will check for second year. Yes, 3 lakh is your sales and 50,000 is GP. You have put over here. Finally we will calculate it over here. So 250,000 is our cost of goods sold. Just put over here. That is 250,000. And then average stock. This is what we have calculated above. You can see over here how you will calculate your average stock for second year. Please note, this one is your stock 25,000 and 10,000. Opening plus closing. Closing plus opening divided by 2. So we have got 17,500. Alright, so here average stock would be written. Divisor, and amount of average stock is 17,500. Now we will calculate it. How? Cost of goods sold divided by average stock 17,500. So we have got our ratio 14.28. This is what we have calculated. Again, stock turnover ratio for the second year. So stock turnover ratio for second year is 14 times, and here you have calculated 14 times. It may be rounded as 14. So 14 is your stock turnover ratio for second year. As you have seen that we were calculating for first year only, but for stock turnover ratio I have calculated for second year as well. Remaining everything you will calculate by yourself. Now the last formula is debtor turnover ratio. This is our fourth formula, that is debtor turnover ratio. And how would you calculate debtor turnover ratio? For that you need to have, but one more thing I will like to explain you. Look over here. Answer is in days. So please note, it is not ratio, it is debtor turnover period. So I'm going to correct it, and here you will write period, because answer was given in days. It's not ratio. So there is a misprinting over here. So we are going to correct it. So calculation of debtor turnover period, and same we will be using over here, and you will correct it by yourself. This is debtor turnover period. Alright guys, so now we are going to calculate what? Debtor turnover period. For that, first we will write the formula. As I have told you, it is not ratio, it is period. And how would you calculate period? I am sure that you people have a very good idea how to calculate debtor turnover period, but meanwhile I need to write it properly. For that, average receivables or debtor, or debtors, and then you need to divide it with net credit sales. I'm going to divide it net credit sales, and let me put a divisor over here. Look, sometimes you will feel that arrangements are more important, so you need to spend some time for arrangements as well. Like I am just putting a divisor or line. It may be possible that we can do rough work, but I'm requesting you to please be very careful. Never be writing it casually. Everything would be neat and fine. We need average receivables. Let's get back. And as you can see that in our question, it's very interesting. This is your first time when you will see debtors and bill receivable. There are two receivables, 20 and 10. Normally you do write only debtors, but actual formula is average receivables. So debtors and bill receivable. There is nothing else. So 20 and 10 is your average receivables. That you will write over here 20,000 and 10,000. Then we need to put net credit sales. So let's put net credit sales. But as you know that in this question we have sales. Gross sales is not mentioned, returns are not mentioned, cash sales are not mentioned. So this sale would be considered as net credit sales 350,000. So here we will put 3,50,000. Alright, and then you need to multiply it with 365 or 366 or 360. We will see if we will get answer by putting 365. And same we will be writing over here 365. Now finally we are going to calculate it over here. First, average receivables that we have got. So let's put the formula. 30,000 average receivable divided by 3,50,000 cross and multiply by 365. Alright guys, so we have 31 days and answer for this is 31 days. So normally days are not in decimals. This is 3-1 in 31 days, but let's put 360 and see what happened. So it's almost 31 days. Either we are putting 365 or 360. This is one of the same thing. So you may write or 31 days. Alright guys, debtor turnover ratio is also calculated. And in this way all four ratios for first year is completed. Question number 4, first year and 31 days answer. Here there are two corrections, 1.25 and 33. When you will solve for second year, you will be very careful in observing your answers. 4 are completed in this way. All ratios are completed. So first was current ratio, answer was 1.5. Current ratio 1.5 for first year. Then you have liquid ratio, answer is 1.25. Liquid ratio 1.25. Then third, stock turnover 28, stock turnover 28, and last formula debtor turnover 31 days. So we have debtor turnover 38, 31 days. And in this way our lecture has been ended. As I have said that I will solve for first year and you will be doing absolutely same for the calculation of second year. While at the same time I have calculated stock turnover ratio for second year as well. Question is completed. Please, it is request to complete second year as early as possible and solve this question for 2-3 times. After practicing, if you feel anything difficult, you are very open to share your questions through messages, text, or you can comment. You can directly me to share your problems. I will 100% sure to answer your queries instantly. It's time to end our lecture. Thank you very much for your time. It's time to say goodbye. Allah Hafiz.